But let's get talking about a couple of companies. Girish Agarwaal, the director of DB Corp, joins in to talk about his earnings. Hi, Girish, good to see you in. I'll just go through the ad revenue, which was up around 5%. Give us a sense on whether that actually met expectations and how exactly was it in terms of local advertisers versus national advertisers, and what is the outlook for FY13?
So if you look at the whole last year, 12 months, we grew around 12.4%. The last quarter was a disappointment where we were able to just grow by 5.5%. And I guess this growth was largely driven by the retail, because in retail we almost grew around 19% overall. And national advertising kind of took a dip. So I think that was slightly, not good for overall scenario. But I guess largely depend also on the entire economic scenario around, because I've been talking to a couple of advertisers, so they are holding back. I don't know for what, but they're holding back because the consumption, what they are expecting from the market is not coming to them, and hence they're kind of holding back the advertising. But in spite of that, if you look at my PAT number, we were able to grow the PAT by even 1% year on year on that particular quarter, in spite of the new launches in Maharashtra what we have taken up.
How will things pan out in the coming quarter, you think, or coming quarters, this and the next? Are there any more additions planned, or will it be only a question of absorbing the costs for launches already made?
See, we have done the major expansion in the last 2 years in Jharkhand and Maharashtra. So the company, we have taken a call that for next 12 months we will be more into consolidation mode of ensuring that we take the revenues out of these markets where we expanded ourselves and also from our existing markets. So I don't see any large major launches happening in Maharashtra or any other market this year. But at the same time, the focus will be that how we can monetize the expansion which we have taken up in the last 2 years.
Girish, consequently, your circulation revenues haven't done too badly, which were up 16%. Take us through what exactly helped your circulation revenues rise, because that in the starting of the year was a bit tepid. And what would your outlook be for FY13? How comfortable would you be to possibly initiate another cover price hike?
See, this is not largely because of cover price, it's largely because of circulation expansion, because you grew copies in Maharashtra, you grew the copies in Madhya Pradesh and Rajasthan also. So only out of that 16%, what number you mentioned, around 3.5% has come from the cover price increase. Balance has come from the quantity increase. Okay. And going forward also, see, we are on a very reasonable cover price currently, and we don't want to increase the cover price until we feel that's only the last area to tap on. We'll still be focusing mostly on the advertising revenues, because there's no point disturbing the reader and taking a dip on the circulation or readership over there.
What about raw material costs, newsprint costs? Were they a pressure in the quarter under review, and how is it in the current and next quarters according to you?
I think there's been a relief on the newsprint prices because especially in last 2 quarters we have not seen a major jump. In fact, the last quarter was kind of flattish. And going forward also, what we have the bookings in our hand for this quarter is almost a flattish. So we are assuming that it may stay where it is, except that the dollar fluctuation what may hit the prices. Barring that out, especially on the Indian newsprint side, we see it kind of flat or hopeful to even go down also on the newsprint cost.
Girish, actually, you've enjoyed margins of around 30% plus in FY11, and that has come down significantly because of your emerging editions or your new launches. Give us a sense on what sort of sustainable margins are we working with in FY13, and when would you possibly break even on the EBITDA level for your emerging markets, emerging editions?
See, if you look at my mature markets, we are still at an EBITDA of around 33.3% in spite of the advertising number not going up to our expectation. So that shows that the market where we already present are a pretty robust market in terms of health over there. And the new markets of Jharkhand and Maharashtra, our experience says that we take around 3 to 4 years time to do a turnaround in those markets for being a EBITDA positive. So I hope another 2 years more to go.
Okay, so just leave us with some guidance then with FY13. Do you expect, looking at the ad trends which you've spoken about, what sort of top line growth can we work with, as well as what sort of margins could we possibly work with?
Okay, see, internally we are working on a 20% advertising growth. That's what we are trying to achieve. Now let's see how much market supports us to achieve that number, because internally we are all working on that number. Now depends on the support from the market. I'm hopeful that we should be able to achieve that if the market improves a bit.
All right, Girish. Thanks very much for joining in. So that is the word coming in on DB Corp. Not very highly traded on the volume front. 50.99 currently for the Nifty. We're okay. Broader markets outperforming. Time for a break. We'll get a technical check once we come back.